Hi, I'm Elaine Ellingham, President and CEO of Omai Gold Mines. We have a past producing property down in Guyana, and we've been working on it for about 3 years, have established a 4.3 million ounce resource, and we just recently finished a PEA that we're quite pleased with, but we believe it's only a baseline PEA and has a lot of room to grow from there.
Good to see you in my hometown this time.
Yeah.
So when we saw it, Toronto, was it?
Yeah, I think it was Toronto.
Yeah,
We had a nicer view.
Had a much nicer view, yeah. So we can't afford it. London
There
prices.
we go. Yes.
Yeah. Well, good to see you. You were here for a conference, but you also sort of roaming the streets, like talking to big investment groups as well. Yeah.
Right, absolutely. I think I think the market's turned a little more favorable. I think for us, doing the PEA obviously was a big milestone, and it's kind of separated us from the pack of explorers. So yeah, there are lots of good meetings.
Lots of good meetings and a lot of interesting goals. Heading up towards $2,400. That's getting everyone going. Now, I don't necessarily think that's going to cascading down through into the junior equities yet, but expectation is that something will happen.
Right. Yeah, you're absolutely right. I mean, with this gold price, you would expect all the equities to have just doubled and tripled. And yeah, they've bumped up a bit, but it's still pretty subdued. But
we're seeing a lot of M&A activity, and I think because of that, obviously some big developers with lots of ounces, 5 million type level, you're pretty close, are getting gobbled up. We've seen even in your backyard, as it were, Guyana, you've had G Mining and Reunion and making an announcement recently as well. So it's busy out there.
Yeah, it's starting. I mean, I think a lot of the M&A work right now, M&A activity, is kind of very focused in ones where, there's some history and reasons for those transactions. For example, I mean, the management of Reunion and G Mining go way back, right? They've been working together for years and years. So again, it's kind of a relationship that they're building off of.
Right. Okay. So let's talk about the PEA, because we've got the resource. We understand the size of the opportunity. What does the PEA tell us?
Yeah, actually, it's really good. We did it only on our Wenot deposit. As you know, we have 2 deposits on the property. There's one that would be open underground, and then one that we've been really focused on, which would be a single large super pit. And so basically that was, it's up at 2.4 million ounces. Mm-hmm. We only were able to incorporate into the economic pit for the PEA about 1.9 of the 2.4 million ounces. But it turned out very, very strong, I think, is net present value of about 560 million, looking at a production of 1.8 million ounces over 13 years, and about 142,000 ounces per year average. Okay. So we were quite satisfied with that. And I think where we were probably a little disappointed is 500,000 ounces that we had drilled, a lot of which we drilled last year, did not get into the economic pit. And that's because we were running on a thin budget, and we were kind of excited because we knew we could step out and add ounces, but the drill spacing wasn't close enough to actually get them in there. So we need to focus on that. And there's a few other aspects that we really think we'll do just kind of a two-pronged approach. One is to keep working on that, but the second is, with the PEA in hand, to start into some engineering.
Right, and you talked about this at the beginning, so an initial PEA. Your expectation is that you can quickly bring more into indicated. Is that the idea? And therefore start affecting the economics more positively.
Right. It's incorporating some of those. Also, strangely enough, even within the economic pit, within the PEA pit, we focused on, it's a very wide deposit. And so the way we drilled it, we didn't drill a lot of the material on the south side. So right now, that's in our economic model as waste.
Yeah.
But we are pretty confident that by putting some drill holes into that's going to actually come into the mineralized material. I can't say ore, it's not allowed anymore, ore. Yeah. So it goes in our economic model from being a cost to actually being a revenue. Yeah. So there are things like that we know we can do to boost the economics and expand it. So the PEA was important for us because basically it allows us to move forward in Guyana looking at permitting, right? And permitting can lead to the mining license. So that just makes good sense to do that as well.
Right, and I'm going to ask this question, and I know it's early days. I think gold's been up around these levels for about all of 3 months. But I've got to ask it because I think retail expect companies to dramatically change their business model and plans and how they kind of tackle the prospect in front of them. So Has your thinking changed given the high price gold environment?
I guess with a project like Omai, like historically the average grade was 1.5 for the open pit. It still is about that, gets higher grade at depth. It would expand the deposit, but it's, I guess in the mining industry, gold bugs love these types of companies, but at the same time, you hope for the best, but prepare for the worst.
Yeah.
So that's always my business model is, make a company bulletproof, make a project bulletproof.
Yeah.
But obviously, the economics just flies upward. I think we ran our PEA, we did at $1,950 gold, and it was 560 million NPV. If you go it up to 2,200, it flies up to 770 million NPV. So that gives you an indicator.
It gets the ball rolling, let's say.
So at this gold
Right.
price, it's almost 50%. Was it 50% higher? Yeah.
Would you change things like the cutoff in an environment
You can,
like this?
yeah, absolutely. We used a
again.
0.35 cutoff, but
Right, okay.
we even considered taking the cutoff down to 0.3.
Yeah.
But we just tend to be a bit
You
conservative.
got that in the back pocket.
Yeah,
for
absolutely.
for later. Now, and the other thing that I guess people have looked to is because there's a whole bunch of M&A. You've explained, the GT reunion, the closeness of the teams, but there's a lot of M&A out there elsewhere. West Africa, we're seeing in the US, down in down in South America as well. There is an expectation that the bigger companies with the more ounces, the 5 million ounces type companies become very, very attractive as the majors try to kind of backfill their reserves, increase their resources as well, obviously, but it's the reserves they're looking for. Do you think there are any shortcuts in a higher priced gold environment for companies like you to kind of, do the beauty parade and maybe move things a little bit quicker? Because these companies do their own data analysis. They don't need you to model it for them. So can you speed things along?
I think there are definitely companies kicking the tires, and you're right. 5 million ounces is sort of a benchmark, especially if a company is looking at going into a new jurisdiction.
Yeah.
So, most companies coming into Guyana, it would be their first mine in Guyana. So, you need the higher threshold. I guess we did our PEA in our first 3 years on the property. I think that's kicking it along.
Yeah.
But actually, it's sort of, it is a baseline because we already know we have 500,000 ounces. We can at least bring some of those in. We can drill on the south side within that PEA pit. We also have the underground deposit that's only 400 meters away. Very nice looking deposit. It's another 1.8 million
What's the plan
ounces.
there? To come in from the pit, or
no, you'd actually come from surface probably.
From surface, okay.
Yeah, it's only the top of it's only 300 meters deep. It's not that deep.
Got it.
It's really nice mineralization, very thick units. It's flat lying zones, which is a little different for us.
Okay.
But some of those zones are 75, 100 meters, so very different from a lot of gold mines that have fairly narrow zones.
Cool.
We did not include it in the PA, not because we don't have faith in the economics, especially as you're saying at this gold price.
Yeah.
So why we didn't do it is it would just have taken us longer, and I think we would have to plan the underground mining and do a lot of that engineering. So in this gold price environment, yes, it probably makes sense to do the engineering because it's beautiful mineralization. And, at a $2,300 gold price, it's going to look attractive.
Yeah, and I guess it's big enough, and it's a question of a company of your size, you've got to deploy the capital in the most efficient way possible. So that's in the back pocket, and quite a nice thing to have in the back pocket. And the open pit is a big project and a good starter for anyone, quite frankly. So there is that. Can I talk to you about valuations, right? Because, the market is valuing you. I guess you come from humble beginnings, but it's you've got to work hard to try and get people to understand what it is that you've got. So just if you don't mind, what effect does a restart have in terms of the psychology of a retail buyer or the market more broadly? Should they be discounting you, or do you think, or are they unfairly discounting you, or do you think it has no bearing on your ability to move this forward?
Yeah, I think it's like anything, a past producing mine. People always wonder, are there legacy issues? Did people explore it till there's nothing left?
Right.
So one is it's a pretty basic looking project, and so the government has fully indemnified us from any historical small or large scale mining.
Yeah.
But IAM Gold shut the property down and did the reclamation, and it's a pretty reputable company. And I'm not saying that just because the CEO is someone I know.
Yeah, yeah,
and have a lot of respect for.
Yeah.
But I mean, so there is minimal, there's no concerns there. The other interesting thing about Omai is that it was shut down prematurely because, prematurely, the gold price was under $400. The company that was running it had acquired another large project 200 miles away and had decided they were going to move the mill and a lot of the infrastructure because it made sense for their corporation. Yeah, I mean, that company did little or no exploration outside the deposit. So that's why I took the job, because I went, oh, this is just wide open. But you're right, there's always that perception.
Right, okay. And then with regards to, given what you've got ahead of you, again, I come back to it can be seen as sort of a problem or an opportunity in terms of leverage, the where you're at in sort of the market cap, and in terms of how you allocate your time, allocate your capital going forward.
Right.
Resource done, PEA done. What do we look for next?
Yeah, it's working off that baseline. I call it a baseline PEA.
Yeah.
So very focused. We've got about 5 areas where we want to expand into the known resource, do some more drilling, bring those into the larger PEA pit. Also, we know that when you start an open pit, you still have to start from the top down, and so some of the superficial stuff is lower grade, the saprolite. So another way to really have an impact on the economics, the NPV and the IRR, is having higher grade in the first couple of years. So we have a couple of at-surface smaller deposits. They're not 1 million ounces or 500,000 ounces, but they're certainly enough to put like a third or half of your mill feed for the first few years of the higher grade. And so we will focus on drilling those off this year because those will have high impact. So basically we're looking at what's the highest impact to the NPV.
Got it.
Right?
Okay. So drilling is the way forward. Simple as that.
Yep.
And when would you expect to perhaps rejig the PEA? Because there's no point in leaping to a PFS at this point, is there?
Yes. We would just go straight through.
You would go straight through?
Yeah.
Okay.
Absolutely.
Fantastic.
Just remember, it's a past producing mine. So, I mean, we already have the tailings situation all worked out.
Okay.
Our actually PEA should be published at the end of this week or very soon. So some of the logistics of how you open a new mine there are based on how it ran in the old days. So like metallurgy, right? We know what the recoveries are.
Yeah.
We already have a good sense of the site and condemnation drilling from history. So there's work and engineering to do. So on that front, like as I said, there's a parallel run, but we would run straight for the PFS.
Okay.
And somewhere in there, the new resources would all get incorporated. So I actually just hired a new country manager, and he's a mining engineer who started his career at Omai.
Right.
And so he's Guyanese, but then he worked around the world. He worked for Barrick in Tanzania and worked in the Philippines. Yeah. He was a chief engineer up at Detour, the big Detour open pit mine. So he's living back in Guyana, and so it's great having him there because he's the how do we build the mine, right? He's the operator guy, and so he's really excited. And so it's great having him on board. He knows a lot of the people in country, and that's where he wants to live.
I guess in terms of framing this conversation for people listening new to this, or even reminding your current shareholder base, it's not a kind of pure play exploration team in that sense. You look at your track record, very much geared towards producing or building and producing gold. So it's an unusual setup in that sense.
I've been an exploration geologist for a lot of years. And, I like to focus on getting there. I mean, to me, I like rocks and everything else. No bias, just like all geologists. But to me, it's more about, how do you get to the goal and how do you set your milestones? And I think every we've put out 3 43-101 resources and a PEA in our first less than 3 years on a project. And so to me, it's always like, where's the next milestone? How do you get there, right?
But it seems to be very, very not only is it quick, but you're very much focused on this thing is getting production. This is not a game of play the market. This is a game of I want to produce gold, and the team seems to be you're setting up the team for that. And of course, foreign producing project, it is everything's there that you need. You know where everything's got to go. So I guess it's made it a little bit easier for you.
It's also been like the government is very keen on seeing that mine reopen.
Yeah.
It was a source of a lot of economic prosperity for the population of Guyana, and they haven't forgotten that. So, it had a good feeling to it. And so the government, a lot of people in the government, well, probably almost all of them have been there at some point. A couple of them have worked there and things like that. So I mean, working with a government that wants to see mines open, you just, run, don't walk, right? Just, it makes sense.
Yeah.
And usually it's governments and permitting process and all this type of thing that slows down a project.
Sure.
When that door's kind of open, you got to run through it.
You do.
Yep.
Elaine.
Yeah, thank you so much.
Good to see you. Go enjoy the conference and get after them, okay?
Will do. Okay, go find those interesting stories.